Good morning to all traders and welcome to today's market insights video provided to you by Orbex. It is the 22nd today and I wanted to talk about three FX majors: euro dollar, pound dollar and also the Kiwi. Euro dollar seems to be supported by the geoeconomic data. Surprisingly enough, the German indicator actually showed much better figures than expected. However, it also hangs on the safe haven dollar at the moment. Do not forget about this. So any upside could be limited. Pound on the other side, I mean, we've got the daily death toll actually increasing, and it's now second after the United States. That seems to be adding some uncertainty around COVID-19. At the same time, the Brexit negotiations are going to restart this week, or we're starting, and the UK seems to be holding against a hard stance against the negotiations. So that doesn't really take in with a good heart from the markets. That's why pound has actually fallen. Now, the other pair is the Kiwi. The Kiwi, I mean, the RBNZ announced that to pretty much just free up house lending. However, initially this was seen, although initially seen as supportive for the Kiwi, Kiwi actually lost quite a bit over the sessions because these decision, of course, to free up house lending at a time when the markets are in a free fall, pretty much, are in a correction, it's been now questioned. So there is also some more room to the downside for the Q, in my opinion. So now, without further ado, though, I want to start with the euro dollar today, okay? And we've been talking about this move to the downside as an ABC correction, right? So we are now currently in wave C. We've done wave 1, yeah, and we're currently in wave 2. Some would suggest that wave 2 ended up here and then we will continue further down. But purely because of this move over here looking corrective, right? I believe this is wave X because it is a complex edit correction. And now we're going to get an A, B, and a C. Okay, and this is where wave Y is going to end. Now, that being said, we've got A, we've had B done, and now I'm looking for this move to the upside. You see, A, B, it could be a C down here, and then we're going to go 1, 2, 3, 4, 5, and then 3, 4, and 5 again to take out wave 2. Obviously, this is going to be above the 1.099, okay? We could go to 110, good psychological level, maybe perhaps a little bit above, and then start moving lower again, because as we all know, the dollar is likely to be supported at least in the next few weeks, not to say few months, right? Now, on the pound, the situation is this. We've seen this massive decline the other day, right? Now, this, if you remember, this up here is wave D, and we're waiting for wave E. This is a multi-year triangle for us, right? So all the intermediate waves within this triangle are the substructures, are corrections, right? So we've had the ABC ending up here, and this is 1, 2, 3, 4, and 5 for wave A, okay? Then this is wave B for us. And then we're going to get another wave to the downside to take out wave C, which is all going to be the end of this correction, and the end of the triangle, to be honest. Now, there's multiple ways one can structure this move to the upside, right? But I think wave B is not yet done. One could say that we've had the ABC over here, and this is wave B. It could be the case, but again, purely because of this move down here looking corrective, okay, I believe we are still in an ABC, which means this is the intermediate term wave B, and then we're going to get wave C, which is going to end the wave B in the primary wave, and then start looking for prices to move lower. However, in the short term, I'm looking at this opportunity to the downside to take us down to at least the previous low, which is the 126.60, right? So how I see this is wave A for me, because we've got 1, 2, 3, 4, and 5 over here, right? And A, B with a triangle, A is 1, 2, 3, 4, and 5 over here. So we're expecting a C, right? Now, this is going to be the same as A. We've got 1, 2, 3, 4 the rule of oscillation most likely going to be respected over here. And then we're going to get a wave 5 that is going likely to be extended a little bit, right? Unless if, of course, this turns out to be a substructure on the downside, which would suggest that we'll have 1, 2, then an extended 3 over here, yeah, and then we'll get a 4, and then we'll get a 5. That would suggest the prices are going to go even lower to that, and even can go back to 120, even below. Then we're going to get B and then C. Obviously, this is all likely to change in the future anyway, so we'll have to go with how prices are reacting to current fundamentals, and mainly, I would say, the COVID-19 situation. Now, New Zealand against the dollar. This is an ABC, A, B, and a C, right? And we are now expecting wave 5 to end, okay? So at the moment, we are forming wave 4, okay? So I see this as a leading triangle, okay? That's why I call this NA, 1, 2, 3, 4, and 5. We have like wave and 4 intersecting one another, so that's why I see this as an impulse, plus wave 3 is an impulse, so it's usually the case with leading triangles. Now, we're expecting, of course, a correction, A, B, and I'm waiting for wave C to end, okay? That is 1, 2, 3, 4, and 5. We want to go below wave A, which is the 59.27 at least. We could even go below the 58.45, or at least come down to that level before moving all the way up, okay? So I see some weakness in the short term as well for the Kiwi, as well as for the pound, right? Whereas on the euro dollar, I see some potentially maybe short, maybe even medium term upside to around 110, maybe higher, before prices start moving lower. So I'm expecting for wave C here as well. When the correction finishes, we're going to move up for wave 4 and then move all the way down. Now, again, one might suggest that, okay, you know, this is an ABC, we've got W, X, and Y, and wave 4 ended up here. Well, it could be a case. And this wouldn't be a surprise if this is an impulse anyway, right? This looks corrective anyway in either case. However, you know, if that is the case, it means that we're going to break below the 58.50. Okay, that will be the first sign. Once we get a test up here, then most likely looking for prices to move lower, with first target the 55 or 56 or so.